I am Jeremy Grantham. I am 86 years old, and over the past 53 years, I have managed more than $100 billion, predicted the dot-com crash, warned about the 2008 financial crisis months before it happened, and built one of the most respected investment firms in the world. And today, I am going to tell you exactly what I would do if I woke up on January 1st, 2026, with absolutely nothing in my bank account. No savings, no investments, no safety net. Just my knowledge and a burning need to build wealth from zero. Because here is what nobody tells you about starting from nothing. It is not your lack of money that will destroy you. It is the mistakes you make in the first 6 months that will either set you up for decades of prosperity or trap you in financial mediocrity forever. And I know this because in 1969, fresh out of Cambridge with degrees that meant nothing in the real world, I lost almost everything I had saved in my first major market position. I thought I was smarter than everyone else. I had studied economics, I understood the theories, and I was convinced I had found an edge. Within 3 months, I watched my account drop 60%. I could not sleep. I could not eat. And the worst part was not the money I lost, but the realization that everything I thought I knew about building wealth was completely wrong. That failure taught me something most people never learn. Starting with nothing is not a disadvantage. It is the greatest advantage you will ever have if you know how to use it correctly. If you are watching this and you feel the weight of starting from zero, hit that like button right now. This is going to challenge everything you think you know about money. Let me tell you what is happening right now in January 2026 that makes this the most critical moment you will ever have to build real wealth. We are standing at the edge of one of the most expensive markets in history. The S&P 500 is trading at valuations that have only been exceeded twice in the past century, right before the 1929 crash and right before the 2000 dot-com bubble burst. Everyone around you is celebrating. They are buying at the top. They are convinced this time is different. And that terrified feeling you have watching everyone else get rich while you have nothing, that is not fear of missing out. That is your survival instinct telling you the truth. You are not behind. You are in the most powerful position possible. You have $0, which means you have zero exposure to what is coming. While everyone else is about to watch their portfolios cut in half, you are going to have cash ready to buy assets at 50 cents on the dollar. But only if you do not make the mistake that destroys 90% of people starting from nothing. Only if you do not try to catch up by gambling on whatever is hot right now. Here is what most people do when they start from zero. They panic. They see everyone else with investment accounts and retirement savings and real estate, and they think they need to make up for lost time immediately. So they dump whatever money they can scrape together into whatever performed well last year. They buy high, they sell low when it crashes, and they spend the next decade trying to recover from mistakes they made in the first 90 days. I have seen this pattern destroy more wealth than any market crash ever could. The desperation to catch up kills more financial futures than starting late ever will. So before I give you the exact 7-step plan I would follow starting today with nothing, I need you to understand something. This plan will feel slow at first. It will feel boring. You are going to watch other people make quick money on things you are avoiding, and you are going to question whether you are doing the right thing. That doubt is the test. That is where 90% of people fail. Not because the plan does not work, but because they do not have the discipline to follow it when it feels like they are being left behind. Let me ask you something honest. Does starting from zero terrify you, or does it keep you up at night knowing you should have started years ago? If that fear is real for you, comment your specific situation below and finish with this: "But I will win this fight." Sometimes naming the fear is the first step to beating it, and your comment might give someone else the courage they need. Now here is what you need to understand about your current situation that everyone gets wrong. You think having $0 is a disadvantage? You think you are behind. But in January 2026, starting from zero gives you 3 massive advantages that people with money do not have right now. First, you have no bad positions to unwind. You are not stuck holding overpriced tech stocks you bought at the peak. You are not sitting on a 401k that is 100% allocated to an index fund trading at 35 times earnings. You have the freedom to build this correctly from the beginning. Second, you have time on your side in a way that people with wealth do not. Someone with $500,000 in the market right now is terrified of losing it. They make emotional decisions based on fear. You can think clearly because you have nothing to lose and everything to gain. Third, and this is the one nobody talks about, you are about to live through the greatest wealth transfer opportunity of the next decade, and you are positioned perfectly to take advantage of it. When assets are expensive, having cash is a curse. When assets are cheap, having cash is a superpower, and we are maybe 12 to 18 months away from cheap. But here is the warning I need to give you before we get into the 7 steps. This opportunity window will not stay open forever. If you waste the next 6 months chasing momentum stocks or trying to day trade your way to wealth or buying crypto because someone on social media told you to, you will miss it. And when the real opportunity comes, when quality assets are on sale for half price, you will be broke and broken watching from the sidelines just like you are now. So the plan I am about to give you has 2 phases. Phase 1 is building your financial foundation in the first 6 months while everyone else is still partying. Phase 2 is deploying capital when the sale starts. Both phases require discipline most people do not have. The question is whether you are different. Here is the plan. 7 steps. Each one has a specific timeline. Each one builds on the last. By the end, you will know exactly what to do in January, what to do in March, what to do in July, and where you need to be by December 2026. This is not theory. This is not hope. This is the exact system I would use if I had to start over today with nothing, based on 53 years of watching how real wealth gets built and how it gets destroyed. Step 1 covers January and February 2026, and it is the step everyone skips because it is not exciting. You are going to build a $1,000 emergency buffer, and you are going to do it before you invest a single penny in anything. I do not care if Bitcoin is going up. I do not care if your friend just made 50% on some stock. You are going to save $1,000 in cash that you do not touch for anything except a genuine emergency. Here is why this matters more than you think. Every single person I have ever seen fail at building wealth from zero made the same mistake. They invested money they needed for living expenses. Then life happened. The car broke down. They got sick. An unexpected bill came. And because they had invested everything, they had to sell their positions at exactly the wrong time, usually at a loss to cover basic expenses. That one mistake compounds into years of financial struggle. So you are going to work extra hours, sell things you do not need, cut every unnecessary expense, and put together $1,000 in a savings account that you pretend does not exist unless your car dies or you need to see a doctor. This is not your investment account. This is your protection against forced selling. Most people starting from zero can build this in 60 to 90 days if they are serious. If you cannot save $1,000 in 3 months, you are not ready to invest. Fix your income problem first. Step 2 covers March through May 2026, and this is where you are going to build your deployment fund while everyone else is buying at the top. You are going to save $300 per month every month without exception, and you are going to put it in a boring high-yield savings account earning 4 to 5%. Not Bitcoin, not stocks, not your friend's business opportunity. Cash. By the end of May, you will have $900 in addition to your $1,000 emergency fund. This is your future investment capital, but you are not touching it yet. And here is what is going to happen during these 3 months that will test everything in you. The market is probably going to keep going up. People are going to keep making money. Your coworker is going to tell you about the 30% gain he made. Your family is going to ask why you are not investing. And you are going to feel like an idiot watching from the sidelines. This is the test. This is where weak hands break. They cannot stand watching other people win while they are saving, So they dump their deployment fund into whatever is hot, usually right before it crashes. If you break here, you lose everything. If you hold discipline, you win everything. Remember what I told you. We are at the second most expensive market valuation in 100 years. Buying at the top does not make you smart. It makes you the person who provides exit liquidity for people like me who have been investing for 50 years and know when to sell. Step 3 happens in June 2026, and this is where you are going to set up the infrastructure for real wealth building. You're going to open a Roth IRA and you're going to make your first contribution of $500 from your deployment fund. Why a Roth IRA when you are broke and need money now? Because this is the most powerful wealth-building tool available to regular Americans, and you need to start it now even with tiny amounts. Every dollar you put in a Roth IRA grows tax-free forever, not tax-deferred. Tax-free. When you are 65 and you have $2 million in that account, you will pay 0 taxes on any of it. 0 capital gains, 0 income tax. Nothing. And here is the part most people miss. The Roth IRA contribution limit is based on the calendar year. If you wait until next year to open it, you lose this year's contribution space forever. You can never get it back, so in June, you are putting in $500 even though the limit is over $7,000 for the year, because something is infinitely better than nothing, and you are establishing the account and the habit. You are going to invest that $500 in the most boring investment possible, a total market index fund, and you are going to forget it exists for 30 years. Now let me pause here because some of you are thinking, this sounds too slow, too conservative, too boring. You want the plan that turns $1,000 into $100,000 in a year. Let me tell you what happens to people who chase that plan. I have watched it for 5 decades. They lose everything. Not most of it. All of it. The fastest way to build wealth from zero is to not lose money on stupid mistakes while you are building your foundation. Every dollar you lose chasing momentum is a dollar you will not have when real opportunities appear. Every month you waste starting over from another blown-up account as a month of compound interest, you lose forever. Slow and steady does not just win the race. It is the only thing that wins the race when you start from nothing. Step 4 covers July and August 2026, and this is where you are going to increase your savings rate and build financial discipline that will serve you for life. You are going to find a way to save $400 per month during these 2 months. Not $300, $400. I do not care if you need to work weekends. I do not care if you need to cancel subscriptions or stop eating out or sell things or ask for extra shifts. You are going to find $400 per month because this is where you prove to yourself that you are serious. By the end of August, you will have another $800 in your deployment fund, plus the $400 you had left after funding your Roth IRA in June, giving you $1,200 in cash ready to deploy. And here is what else is likely happening by July and August of 2026. The cracks are starting to show. Corporate earnings are missing estimates. Unemployment is ticking up. The Fed is talking about rate cuts because something is breaking. The people who were bragging about their gains in March are getting quiet. And you are sitting on cash, watching, waiting, learning to read the market signals. This patience is building something more valuable than money. It is building the emotional discipline you will need to buy when everyone else is panicking. Subscribe if you want the strategies that actually work when you are starting from nothing. No hype. Just 50 years of real experience. Step 5 is September and October 2026, and this is where the plan gets interesting because this is likely when opportunity starts to appear. You are going to continue saving $400 per month, but now you are also going to start building your watch list. What is a watch list? It is the 10 to 15 specific investments you are going to buy when they go on sale. Not random stocks. Not whatever is trending. Specific quality businesses that you understand, that have strong balance sheets, that pay dividends, that have survived multiple recessions, and that are currently overpriced but will eventually be cheap. I am talking about companies like Procter & Gamble, Johnson & Johnson, Coca-Cola, companies that will exist in 30 years and will keep paying you dividends through whatever happens. You are going to spend September and October learning everything about 10 companies. Read their annual reports. Understand what they do. Know what price would make them a good value. When the S&P 500 index trades at 22 times earnings, it is expensive. When it trades at 15 times earnings, it is reasonable. When it trades at 12 times earnings or below, it is on sale. You are learning to recognize value so that when it appears, you can act immediately while everyone else is frozen in fear. By the end of October, you will have $2,000 in deployment capital, plus your $1,000 emergency fund still untouched. You have a Roth IRA with $500 growing. You have a watch list of quality companies with target buy prices. And you have something most investors never develop: the discipline to save consistently, regardless of what the market is doing. This is where most people break. They have cash. They see the market moving, and they convince themselves they need to do something. Do not do something. Wait. The opportunity is coming. Step 6 is November 2026, and this is the month where everything you have built is going to be tested, because this is likely when fear takes over the market. November 2026 is when I expect we will see the first real correction. Maybe 15% down from the highs. Maybe 20%. The headlines will be everywhere: recession fears, corporate bankruptcies, massive layoffs. Your friends and family who were bragging about their portfolios in March will be panicking. They will be selling. They will be telling you how smart you were to stay in cash, and this is where you need to understand something critical. A 15 or 20% correction is not the opportunity. It is the warm-up. It is the market shaking out weak hands before the real drop. You are not buying yet. You are still saving $400 in November, bringing your deployment fund to $2,400, and you are watching your watch list companies get cheaper. When Johnson & Johnson drops 15%, you are calculating what price would make it truly cheap, not just cheaper than it was. When Procter & Gamble falls 20%, you are checking if that brings it to historical value levels or if it is still expensive. The answer in November will probably be that these companies are getting interesting but not quite cheap enough yet. So you wait. And this waiting while everyone else is panicking will feel almost as hard as waiting while everyone was making money. But this is the discipline that separates people who build wealth from people who stay broke forever. Here is what I need you to understand about November and December 2026. The vast majority of people who started this plan with you in January will quit during these 2 months, not because the plan failed, but because they cannot handle the pressure of sitting on cash while the world is melting down. They will convince themselves they need to do something. They will buy the first dip and watch it keep dropping. Or they will panic and spend their deployment fund on something stupid because they are scared. You cannot be like them. You have to be different. And being different means following the plan even when every instinct tells you to abandon it. Step 7 is December 2026, and this is when you make your first real investment moves. By December, the market will likely be down 25 to 35% from the January highs. Your watch list companies will be approaching genuinely attractive valuations. Consumer staples that were trading at 25 times earnings in January will be at 16 or 17 times earnings. Quality dividend-paying businesses will be offering yields of 4 or 5%. And here is what you are going to do. You are going to take $1,200 from your deployment fund, and you are going to buy your top 3 watch list companies $400 each, not all at once on the same day. You are going to spread these purchases over 2 weeks in mid-December, buying a little bit at a time. Why only $1,200 when you have $2,400 saved? Because I have watched market corrections for 53 years, and I can tell you with certainty that when people think the bottom is in, it usually is not. You are buying your first positions in December because these are companies you want to own for 30 years, and the prices are finally reasonable. But you are keeping $1,200 in reserve Because if I am right about what is coming in 2027, you are going to get even better opportunities in the first quarter of next year. Share this with someone who needs to hear it. Sometimes the best gift you can give is the information that changes everything. In December, you are also going to make one more contribution to your Roth IRA, another $500, bringing your total retirement account to $1,000 invested for the year. It is not the full $7,000 limit, but it is $1,000 more than you had 12 months ago when you started with nothing, and that $1,000 is going to compound tax-free for the next 30 to 40 years. If it grows at just 10% per year, that $1,000 becomes $45,000 by the time you retire. From money you saved in your first year, starting from zero. This is how real wealth gets built. Not from home runs, from consistent singles that compound over decades. So let me tell you where you stand on December 31st, 2026, if you followed this plan exactly. You have $1,000 in an emergency fund that you never touched. You have $1,200 in individual stock positions in quality companies you bought at reasonable prices. You have $1,000 in a Roth IRA and a total market index fund. You have $1,200 in cash ready to deploy when better opportunities appear. That is $4,400 in total assets. You went from zero to $4,400 in 12 months, while one of the most expensive markets in history corrected violently. But more important than the money is what else you built. You built the discipline to save every month, regardless of what is happening around you. You built the patience to wait for real value instead of chasing whatever is moving. You built the knowledge to evaluate businesses and recognize opportunity when others see disaster. You built the emotional control to stick to a plan when everyone around you is panicking or celebrating at the wrong times. These skills are worth more than the $4,400. These skills are what will turn that $4,400 into $44,000 over the next 20 years. Now let me tell you what happens in 2027, because this is where the plan gets really interesting and where you separate yourself permanently from people who stay broke. In the first quarter of 2027, I expect we will see the real capitulation, the moment when the last optimists give up, when the market drops another 15 to 20% from the December lows, when quality businesses that were fairly priced in December become genuinely cheap, when dividend yields on consumer staples hit 5 or 6%, when the Shiller P/E ratio on the S&P 500 drops below 20 for the first time in years. This is when you deploy that remaining $1,200 in cash. This is when you buy more of your watchlist companies at prices you will not see again for another decade. And this is when you increase your monthly savings to $500 because your income has grown over the past year, and you have proven to yourself that you can live on less. By the end of the first quarter 2027, you will be fully invested with quality positions bought at reasonable to cheap prices, and you will be saving $500 per month to keep adding to these positions every single month for the next 10 years. Here is what most people do not understand about building wealth from nothing. It is not about making one brilliant investment. It is not about timing the perfect bottom. It is not about finding the next Amazon before anyone else does. It is about developing a system you can follow consistently for decades, regardless of what the market does. It is about saving money you would have wasted. It is about buying quality when it is on sale and holding it while it compounds. It is about never selling in panic and never buying in greed. The plan I just gave you will not make you rich in 1 year, but if you follow it for 10 years, you will have over $100,000. If you follow it for 20 years, you will have over $5,000. If you follow it for 30 years, you will retire a millionaire, all from starting with nothing in January 2026. But here is the hard truth I need to give you before we finish. Most of you will not do this. You will start strong in January. You will save your emergency fund. You will even make it to March or April. And then you will break. You will see something shiny. You will hear about someone making fast money. You will convince yourself that this plan is too slow, too boring, too conservative, and you will chase whatever is hot. You will lose money, you will start over, and you will spend the next 5 years wondering why you cannot get ahead while the people who followed this boring plan are building real wealth. I have seen this pattern repeat for 53 years. The only difference between people who build wealth from nothing and people who stay broke is not intelligence. It is not luck. It is not connections. It is the ability to follow a boring plan consistently when every impulse tells you to abandon it. So here is my challenge to you. Prove me wrong. Be the exception. Take this plan and execute it exactly as I laid it out. Do not modify it. Do not improve it. Do not make it more aggressive because you think you are smarter than the system. Just do it. Save the $1,000 emergency fund in the first 60 days. Save $300 per month from March through May. Open the Roth IRA in June. Increase to $400 per month in July. Build your watch list in September. Hold cash through the correction in November. Make your first buys in December. And then keep going. Every month. Every year. For decades. The plan works. The question is whether you have the discipline to work the plan. Let me tell you what will happen if you do this. In 5 years, you will have over $4,000 in assets, while your friends who are making the same income as you are still living paycheck to paycheck, wondering where their money goes. In 10 years, you will have over $15,000, and you will start to feel financially secure for the first time in your life. In 20 years, you will have over $600,000, and you will realize you are going to retire comfortably. In 30 years, you will be a millionaire, and you will look back at January 2026 when you had nothing, and you will realize that the decision to follow this boring plan was the most important financial decision you ever made. But it all starts with the next 60 days. It starts with saving that first $1,000. It starts with proving to yourself that you can delay gratification and follow a plan. Everything else builds from there. I started with nothing in 1969. I lost almost everything in my first crash, and I spent the next 53 years building one of the most successful investment firms in history by following the exact principles I just gave you. Not by being smarter than everyone else, not by finding secrets nobody else knew, by being disciplined when everyone else was emotional, by being patient when everyone else was impulsive, by following a boring plan for decades while everyone else chased excitement and ended up broke. You can do the same thing. You have the same opportunity I had. Actually, you have a better opportunity because you are starting right before one of the biggest market corrections in modern history. You have the chance to buy quality assets on sale, but only if you build your foundation first, only if you save the cash, only if you develop the discipline, only if you follow the plan. So here is what I want you to do right now. Comment below and tell me which step you are starting with today. Subscribe so we keep working on this together over the next 12 months. Hit like if this gave you a real plan instead of empty motivation, and share this with one person who is starting from nothing and needs to see that there is a real path forward. I will see you in the next video where we are going to break down exactly how to build that watch list and how to evaluate whether a company is actually cheap or just looks cheap. This is just the beginning. Let us build this together.